You ever hear someone say, I want to buy real estate, but I don't have the proof of income, or I don't want to deal with banks asking for my tax returns? Well, that's exactly why DSCR loans exist. And today, I'm going to show you the absolute best cities where this loan actually makes sense. Not hypothetically, not just a list of random cities. I'm talking about real numbers, real properties, and real cash flow. Because here's the thing, not every city works for DSCR loans. Some will make you money from day one. Others might be a long-term play, and some, well, you should straight up avoid. So let's break this down the way it should be done. No BS, real talk, and by the way, stay tuned until the end because I'm going to show you the one market that nobody's talking about, but has been quietly printing money for investors using DSCR loans. Now, before we get into the cities, let's make sure we're all on the same page what DSCR stands for. It's Debt Service Coverage Ratio. Fancy term, but all it means is your loan is approved based on how much rental income your property brings in, not your personal income, not your W-2s, and not your tax returns. If the numbers work, you're approved. If they don't, you're not. Very simple. But here's the mistake people make. They assume they can just buy any property, throw a DSCR loan on it, and start making money. Nope. You have to be in a city where rents are strong enough to cover your mortgage, your taxes, your insurance, and you still have cash flow. And that's exactly what we're going to do today, and we're going to go over it right now. Let's start with Tampa, Florida. Everybody knows Florida's hot right now. No state income tax, people moving there like crazy, but the question is, does it cash flow? Let's look at some real numbers, and let's say you buy a single family home in Tampa for around $450,000. With a DSCR loan, you're putting down 20%, so that's $90,000 out of your pocket. Your loan amount is $360,000. At an 8% interest rate, your monthly mortgage, including principal, interest, tax, and insurance, is about $3,450. Now, what's the rent? A typical 3-bedroom in Tampa rents for $3,600, so you're positive, but barely. You're making about $150 a month in cash flow. Now, is that great? Not really. But Tampa has massive appreciation potential, meaning if you're okay breaking even or taking a straight loss for a few months or a couple years, your property value could skyrocket in 5 years. This is a long-term play, not a quick cash flow machine. Now, let's compare that to Indianapolis, Indiana. The Midwest never gets the hype, but let me tell you something. Indy is one of the best cash flow markets in the country. Here's why. You can buy a solid rental in Indy for $250,000. With 20% down, you're in for just $50,000. Your mortgage, including taxes and insurance, comes out to about $1,950 a month. And rent, well, it's around $2,300. That means you're putting $350 in your pocket every single month. Compare that to Tampa. One is a break-even play with appreciation potential. The other is steady cash flow from day one. Now, if your goal is immediate passive income, Indy is a top-tier DSCR market. But let's say you want something in between. You want some appreciation, but you also want cash flow. Well, that's where Dallas, Texas comes in. Texas is one of the best business-friendly states. No state income tax, and companies are moving there left and right. So what does that mean for real estate? Well, more jobs, more demand for rentals, and in Dallas, you're looking at homes in the $400,000 range. With 20% down, that's $80,000 up front. Your mortgage at an 8% interest, including taxes and insurance, is about $3,100 a month. Now, rent for a 4-bedroom house is around $3,500 a month. So that's $400 in cash flow every single month. Now, that's not life-changing, but here's why Dallas is a winner. Appreciation and cash flow. What? Yep, the home is going up in value and you're making money every single month. It's the best of both worlds. Now, if you're looking for an under-the-radar market that still prints cash, let's talk about Columbus, Ohio. Columbus is an absolute goldmine for DSCR loans because of its rent-to-price ratio. You can buy a great rental here for just $225,000. With 20% down, you're in for about $45,000. Your total mortgage payment is about $1,750 a month. The rent, $2,100. That's a solid $350 in cash flow every single month. And here's the kicker. Columbus is still appreciating, not like Florida or Texas, but it's steady. And it's one of the few cities where DSCR loans actually work consistently no matter the economy. But now, let's talk about Phoenix, Arizona. A lot of investors love Phoenix. It's growing fast, tons of people are moving there. It's got a huge job market, but here's the problem. It's not cash flow friendly. A decent 4-bedroom house in Phoenix costs about $500,000. With 20% down, you are putting in $100,000. Your mortgage is $3,850. The rent is $3,800. So you're negative $50 in cash flow. Now, some people are okay with that. They'll say, oh, but the appreciation will save me. Maybe, but in today's interest rate environment, do you really want to gamble on appreciation when you're already kind of losing money every single month? That's a tough sell for me. So let's wrap this up. If you want pure cash flow, your best bets are Indy and Columbus. If you want balanced appreciation and cash flow, Dallas is the move. If you're okay breaking even for future appreciation, well, Tampa is solid. And if you're chasing long-term growth and don't mind some short-term losses, then giddy up to Phoenix, okay? This might be the thing for you. But here's the thing. DSCR loans only work if the numbers work. And that's why knowing the right city is absolutely everything. Now, I told you at the beginning of this video that there's one market that's been flying under the radar and nobody's been talking about it, but it's quietly been making investors a ton of money. Now, if you want to know what it is and how to structure your DSCR loan for maximum leverage, go watch my next video right here, okay? I break down how to make your DSCR loan stretch further, find hidden deals, and set yourself up for real cash flow. Click that now, and I'll see you over there.